That is our time on Midday Market Brief. Over to Peter Panderson for Money Makers. Thank you, Natalie Anderson, and welcome to Money Makers. I am Peter Panderson, ETF and Options Editor, alongside Victor Bennett, investing in ETFs for the next hour. Gold is up nearly 0.8% to 4,405. Silver and copper both climbing as well. The pattern here is a weaker dollar, and that matters more than supply constraints right now. When the dollar pulls back, hard assets get cheaper for everyone else buying them, so demand rises. But copper is up more than 0.5%, while the euro has only gained ground fractionally. Are you saying the dollar weakness is the driver? Or is there real demand underneath for industrial metals that I'm missing? Victor, there's real demand. Copper's up 60 basis points in a single session. That's structural. But the mechanics work through the currency first. A stronger yen, a weaker dollar, and suddenly emerging markets are bidding harder. The rate story is still the cage. This market moves inside. So your betting rates stay where they are. What happens to gold if we actually see Fed tightening cycle signals in the next quarter? Gold gets repriced lower immediately. The carry cost rises. That's why this rally matters less than it looks. This is a breaking market alert. Bitcoin just absorbed a $4.3 million buy print at 64,067. That's 99 times the median trade size. The order moved through roughly 37 seconds ago. We've got one live call on the board right now. Ethereum short at 1906, target 1900, and the tape is already working. Order flow is 88% sell side, which means the institutional positioning is genuine, not retail noise trying to fade a bounce. That's a clean setup, Peter. But I'd push back on the invalidation level at 1916. That's only a $10 cushion. What happens if we get a wick above that on the geopolitical bid we've been seeing all morning? Valid point, Victor. The wick risk is real, but 68% of accounts are still long Ethereum. That's the flush waiting to happen. We don't need much room to work if the selling thesis holds. Fair, though your historical accuracy on these is 50% across 20 graded calls. So this one's as likely to expire as it is to hit. Exactly why we're watching it with 39 minutes left and an open mind, not an open position. "20 calls graded this week, and we're at 50% hit rate. 7 winners, 7 losers, 6 that went flat. The last closed trade was Cardano short, down 1/3% in 45 minutes. That was a win. But before it, we had Solana long that failed. moving against us by 37 basis points over 83 minutes. So you're not filtering out the ones that expired without resolution, that Ethereum short at 1907 that sat for 2 hours. That still counts as a data point against the record. It counts as expired, not as wrong, Victor. But yes, it's in the graded total. The mechanical point is we had conviction on directional flow 6 times, and we were right half those times. Your one open call is Ethereum short again at 1906. Order flow is 88% sell side. Why re-enter a setup that just burned 2 hours of your time? Because the condition changed. 68% of accounts are still long. That's the flush. This is different positioning than before. Bitcoin's largest print this morning was $4.3 million on the buy side at 64,067, and that print absorbed. We've had 2,951 trades total, with buy flow dominating at 14 million against 5.8 million in sells. The delta sits at 8.3 million, which is 41% of total notional. Peter, those numbers describe momentum, but cumulative volume delta tells a different story. The cumulative volume delta peaked earlier in the session and has been rolling over since we hit 9.5 million. Are you concerned the absorption of that large print might be masking distribution underneath? Victor, I'd push back on that read. The largest prints stacked up all at the same price level, around 64,067. 8 separate prints clustered there. Smallest one still over 260,000. That's not distribution. That's institutional conviction testing the level. Conviction or accumulation before a move. The median print size is only $448. When your biggest trades are 99 times the median, you're looking at a bifurcated market. Which side wins if we break below here? The buy side has depth. Look at the distribution of those top 8 prints. $64,000 of size stepped in repeatedly. That's not one player. That's multiple buyers meeting the same price. Absorption confirmed. Bitcoin at 64.78, the 21 sitting at 63.82. The 200 is 63.34. RSI firm at 66. Resistance overhead at 64.87 and 64.179. Support below at 64.29 and 63.95. Ethereum at 1906, the 21 at 1905.6, the 200 at 1891.5. RSI neutral at 53, the MACD crossed down on the chart. Resistance at 1908.6, support at 1898. Gold at 44.02, the 21 at 43.95, the 200 at 43.71.7. RSI at 60, well within firm territory. Resistance at 44.07.2, support at 43.90. Realized volatility on Bitcoin is running 22% over the last 25 hours, but the actual trading range we're seeing is just over 2%. That gap tells you option sellers have priced in moves that aren't materializing. True, though Solana's a different animal, entirely 36%, realized against a 2.4 range. Does that suggest the market's underpricing tail risk in the alts, or just that fewer traders are there to smooth the moves? Victor, it's pure liquidity. Solana's tighter order book means bigger swings on smaller size. Ethereum sitting at 29% realized with a 2% range calmer than Bitcoin despite higher vol, which tells you where the real capital is flowing right now. And XRP's the outlier. You're not mentioning 27% realized, but the narrowest range at 1.4. That compression suggests consolidation into the next few hours. Exactly. Implied volatility still running below realized across the board, which means call sellers are exposed if we get any fresh catalyst. Watch the 2% bands. This is a breaking market alert. $250,000 Bitcoin buy just hit the tape at at 64,000. That's over 35 times the typical print size. It came through 3 minutes ago and found no sellers. Bitcoin's selling pressure is overwhelming the tape this morning. We're tracking almost 12 million in net sell flow against 5.2 million in buys. The cumulative delta has gone deeply negative, down 8.4 million, and it keeps deteriorating. Meanwhile, Ethereum is barely half Bitcoin's pain at 277,000 net selling. That's the story right here. Peter, but Ethereum's actually worse on a percentage basis, down almost 9% on flow, while Bitcoin's down 53%. That suggests Ethereum holders are capitulating harder relative to their market size. Why aren't we seeing that reversal pattern Ethereum usually shows against Bitcoin weakness? Because, Victor, this isn't the usual setup. Ethereum's cumulative volume delta is steeper and more relentless. Bitcoin's got that one massive sell print at 334,000, but Ethereum's been grinding lower on consistent medium-sized blocks. The divergence you're asking about depends on whether this is capitulation or distribution, and the tape isn't telling us yet. Fair point. The largest Ethereum print we're seeing, though, is nowhere near Bitcoin's size. That actually matters for whether professionals are rotating or just exiting entirely. Exactly. Small prints on the sell side across Ethereum, big institutional blocks on Bitcoin. They're not rotating into alts. They're leaving. Ethereum long intraday setup. Entry 1884.9. Stop 1882.6. Target 1890.1. That's 12 basis points of risk for 28 basis points of reward, roughly 1 to 2.3. The averages are stacked. Price is holding the 21 period, and RSI is at 60 leaves room. It breaks through 1882.6, and the trade is dead. You've got 4 open positions, and only 1 winner in the last 6 graded. How many of these are you running simultaneously? And what's your position sizing when the desk is running negative 68 cents per trade on expectancy? Victor, we're sizing by risk, not notional. Each trade risks the same amount. The problem isn't position count, it's the setup itself. The backtests show negative expectancy across all Bitcoin horizons, and we're seeing it live. That's not a sizing issue. That's a signal the short bias isn't working. Silver's the other open trade. Entry 64.689, short. First target 64.312. Same risk-reward structure at 2.3 to 1. But the tape's showing buying pressure we haven't had in weeks. Why are we shorting into accumulation? Price is capped by the 21 period and below the 200-day. If that changes, if we close above 64.853, we'll say the idea is wrong and we're out. This is a breaking market alert. Bitcoin just absorbed a $930,000 buy at 64,347. That's 86 times the median print size. The trade hit 50 seconds ago, and buyers are still in control, nearly 10 million more on the buy side than the sell. Bitcoin's largest print this session is a $500,000 sell at 64,396, nearly 50 times the median trade size. It hit the tape 44 seconds ago, and it's been absorbed. That tells us the bid was there to take it. But Peter, the cumulative delta is up $70 million on 6,000 trades. How much of that absorption is genuine demand versus algorithmic soaking? The buy side is 14.7 million. The sell side is 9.8 million. That 4.9 million delta doesn't happen on algorithms alone, Victor. Someone is accumulating. True, yet the second and third largest prints, both over 300,000, were consecutive sells at the same price. That's textbook distribution, not accumulation. Distribution requires sellers. These sold. The market took them. That's the market working. We're running 50% hit rate across 20 graded calls this month, which means the tape is telling us something about our entry conviction. 7 winners, 7 losers, 6 that went nowhere. That's the mechanical reality of what we're seeing. Right now we've got 2 live positions, and the order flow is screaming sell side on both of them. Peter, 50% sounds flat until you factor in the asymmetry. Your winners are running 0.3 to 0.4% moves, while your losers are smaller. But aren't you concerned that 68% of accounts are still long across these setups? That's a crowded trade waiting to get flushed. That's exactly the point, Victor. Ethereum is down to 17 minutes with order flow at 88% sell side. BNB has 32 minutes left and 94% of the order flow is on the bid to sell. The invalidation levels are tight, 16 basis points on Ethereum, 21 on BNB, so the market is showing us where the real pressure lies. The tightness works both ways though. If institutional money is still long and waiting, that crowding could reverse fast. Have you considered that a sell-side flush might be the setup that fails? It could, but the mechanics don't lie when 94% of flow votes one direction. The tape is showing us the real order. We follow that, not the sentiment. This is a breaking market alert. Bitcoin's largest print this session. $341,000 on the sell side at 64,204. That's a 61 multiple of the median trade. It hit the tape just over 2 minutes ago and was absorbed. We've closed 6 calls this week. 7 correct, 7 wrong, 6 that expired flat. That 50% hit rate holds. The last one in was ADA short, down 1/3% in 45 minutes. Before that, SOL long worked. But we took a loss on SOL short. At 83 minutes, it moved against us 37 basis points. So you're holding 3 open positions right now, all shorts. But Victor, the order flow picture is different across them. Ethereum and BNB are showing 90% sell dominance. XRP is only 48%. Why are you treating them the same when the setup on XRP is fundamentally weaker? because the core condition is identical on all three. 68 to 80% of accounts are long. That's the flush we're waiting for. XRP has new positioning coming in open interest up, which actually makes it stickier upside. The order flow weakness there is real disagreement, not panic selling. Fair point. But 2 of your 3 expire within the hour. How much breathing room do you actually have if this reverses? 12 minutes on Ethereum, 28 on BNB. XRP gets 43. Tight windows, yes. But when order flow runs this extreme, price moves fast. The dollar and the 10-year are pulling risk in opposite directions. The euro's up 0.6%, suggesting modest weakness in the dollar. Meanwhile, gold's climbing 0.6%, and silver up nearly 1%. Classic risk-off plays that typically signal falling rates ahead. Metals are pricing in less Federal Reserve tightness, which would ease pressure on equities and crypto. The broad stock indices are flat to slightly down, but that's noise against what the 10-year and the dollar are really saying. The inflation fight is cooling, and that changes everything downstream. This is a breaking market alert. A $200,000 sell print in Bitcoin just 3 minutes ago at 64,134. The trade went unabsorbed, a significant outflow relative to the session median of $64. Ethereum's up 1.2% to 1906, but Bitcoin's the real story, up nearly 2% to 64,100. That's genuine breakout momentum, not noise. Peter, Bitcoin's turnover is $3.5 billion in 24 hours. Does that volume support the move? Or are we seeing leverage doing the heavy lifting here? Victor, the volume is legitimate. We're not talking thin tape. The high touched 64,400. The low was 62,676. That's a real range fought over. Fair point. But Ethereum at 1906 is lagging the percentage gain. If this is risk-on, shouldn't the alts be running harder than they are? They are not. Solana's barely 0.5%, Chainlink's 1 1/10. That's exactly the kind of selective strength that holds. Not everything rallying means everything's overheated. The Nasdaq is up 17 points, breaking a flat open to post 0.1% gain. The Dow dropped 185, down 0.3. That's a divergence worth watching, because tech's not usually rallying while industrials retreat. Metals are climbing, gold up 0.6%. Copper and silver both up roughly 0.75%. Energy's flat to modestly higher on both crude contracts. Peter, the metals rally is telling us something about inflation expectations, or at least concern about currency. But copper's up nearly a full point, while the broader market's stuck. Does that suggest strength in industrial demand? Or is it just catching up to supply pressure we saw earlier in the week? It's catch-up, Victor. Copper broke a technical level yesterday. That's mechanical flow, not fundamental demand. The real signal would be if the S&P 500 followed. Right now it's not. Fair point. But gold's near 4,400. That's meaningful. What does equities do if we're genuinely in a flight to safety move? Then the Dow shouldn't be the laggard. It should be protecting. Right now the divergence is noise, not narrative. This is a breaking market alert. A $250,000 sell print in Bitcoin just under a minute ago at 64,232. The trade absorbed immediately into the bid, typical of institutional liquidation flow. That's 51 times the median print size for the session. Longs are paying shorts across 5 major assets. Bitcoin longs pay out at an annualized 6.5%. Ethereum at 3.8%. But the pressure flows the other way on Link, where shorts are collecting at 16.5%, annualized the heaviest transfer in the market. Polkadot shorts are taking 12%, Avalanche 11%. The crowding is asymmetric. Short positions are being rewarded in the assets that have cooled, while longs still pay for momentum in Bitcoin and the altcoin rallies. We've got 50% hit rate on 20 graded calls, which sounds even until you look at the tape: 7 winners, 7 losers, 6 that went nowhere. The mechanical setup is working, but the execution window keeps shrinking because retail long positioning is so crowded that when the sell side moves, it moves fast and then stops. That 50% record doesn't tell us whether you're fighting the trend or riding it, Peter. Of your 3 open positions right now, 2 are betting downside in assets where 80 to 94% of accounts are still long. Is that a squeeze or are you early? The order flow answers that. 88% sell side in Ethereum, 94% in Binance. When the tape inverts that hard against positioning, the invalidation levels are tight because there's nowhere for shorts to hide. XRP is different, only 48% sell flow, which means this isn't a panic flush yet. So XRP is the one that actually needs to prove itself, since the other 2 are just housekeeping. But if you're wrong on the timing, Victor's rule applies: none of this will matter in a month. Correct. The tape either confirms or it doesn't. We'll know in 30 minutes. Six graded trades, 1 winner. That is 16%. The expectancy is negative 0.67, meaning each trade costs you on average. The live record across Bitcoin, Ethereum, and Solana shorts is 4.06 risk units down. Where it fails is obvious. This method does not work in the current regime. But your backtests on Bitcoin intraday show 21% across 124 trades. Why is the live performance so much worse? And are you still confident the sample size matters? Victor, the backtest ran 790 bars. The live desk has 4 setups working. That is thin. Worse, the backtest assumes perfect execution. Real slippage on stops, especially on crypto shorts in thin hours, wipes that edge. The method works in history it has never seen. It fails when it meets actual volume and volatility. So the rule itself is sound, but the conditions it was built for no longer exist. That is a different problem than the method being wrong. Correct. The rule is not broken. The market is.